In this video, I'm going to explain to you what is DeFi or decentralized finance, and I'm going to attempt to explain it all to you. What is it? How does it work? And how can you actually make money with decentralized finance? So let's dive in. First things first, what is DeFi? The definition is it's basically just short for decentralized finance. DeFi is an umbrella term used for peer-to-peer financial services, generally on public blockchains like Ethereum. With DeFi or decentralized finance, you can do most of the things that normal banks can do, like earn interest, borrow, lend, buy insurance, trade, all of these things, but you can do it a lot faster with a lot less paperwork, generally because with DeFi, we're doing it peer-to-peer, all in a decentralized, anonymous, open to all sort of method. Now, to better understand DeFi or decentralized finance, let's take a look at CeFi or centralized finance or the traditional legacy system and show you the differences. So in the traditional financial system or centralized finance, if you'd like to send your money to somebody else, you're likely going to use some sort of app like Venmo or PayPal, or you're going to use like a credit card like Visa or MasterCard, right? Now, in order to do this, it has to go first to your bank, then it goes through the third-party app, and then it goes to the bank of the receiver, and then the receiver finally receives this money, okay? So it relies on third-party centralized intermediaries in order to conduct a transaction. Now, with decentralized finance or DeFi, you basically send your money directly to the person with no centralized authority. Now, with centralized finance, it requires trusted centralized intermediaries like the banks or the third-party apps. Also, they have batch clearing and settlement, and generally there's higher fees and a costly infrastructure attached to a centralized financial system. With decentralized finance, for example, this is all built on a blockchain protocol. There's no intermediaries required. So this allows for faster processing and management, and it also allows us to have lower fees and a reduced infrastructure cost. The main benefits to DeFi is that it's open, it's anonymous, it's flexible, fast, and transparent. So let's take a look at each one of these. First off, it's open. You don't need to apply for an account. You can just create a wallet in the matter of like a couple seconds. Secondly, it's anonymous, which basically means you don't have to provide any personal information in order to set up an account. The third thing is it's flexible. You can move your assets anywhere at any time without asking for permission or waiting, on the phone or paying expensive fees. The next thing is that it's fast. Unlike traditional banking systems where you're going to have to call somebody on the phone and, maybe you're going to have to apply for a loan and, go through all this paperwork and headache. With decentralized finance, it allows you to do things like getting a loan or borrowing money really, really simply and really fast. And the last thing that is completely 100% transparent, meaning that everyone involved can see the full set of transactions. Now that sounds great and all, but how does decentralized finance actually work? Well, let's take a look at the internet, for example. The internet was this big, massive platform that allowed things to build on top of it, right? We built websites, we built businesses, we built applications all on top of the internet. Now, in order to understand DeFi, you have to understand Ethereum, which is the underlying platform that's most widely used in the decentralized financial world. Essentially, Ethereum is like the financial internet. It's this platform that allows all of these things called dApps or decentralized applications in order to build on top of Ethereum. So we have things like stable coins, we have different services, we have different asset management tools, and we have exchanges all built on top of this Ethereum platform, or what we call the financial internet. Now, out of these decentralized applications, the most popular ones are things called DEXs or decentralized exchanges. An example of one is something like Uniswap. And basically what this allows us to do is buy and sell or swap cryptocurrencies anonymously for very low fees really quickly. So for example, I could swap my Ethereum into USDC just for an example. Outside of decentralized applications, it also allows us to have something called stablecoins. And stablecoins are cryptocurrencies that are basically pegged 1-to-1 to the US dollar. So they equal $1. Some examples are like the USD coin, Gemini, Paxos, True US Dollar, Tether, and there's a whole bunch of other stablecoins that that are actually pegged 1-to-1 to the US dollar. So this allows you to get into the crypto ecosystem without the wild volatility. Another decentralized application built in the DeFi ecosystem is something called lending, right? So DeFi allows us to very easily get access to loans, and it also allows us to become a lender and earn interest this way. So it's peer-to-peer lending system instead of going to a bank or any sort of financial institution where you have to, apply and you have to get qualified and all that sort of stuff. This allows you to get a loan from other people in a decentralized manner. One lending platform, for example, is something called Finance. Another application built in the DeFi ecosystem is decentralized insurance. So they're able to do this because there's something called smart contracts, which are basically, think of like a normal contract between two parties where you have this written contract. Well, it's basically just written into the computer code. So it allows you to get things like insurance at a very quick pace and not have to go through all the hoopla that you would with normal centralized finance. Now, probably what you've been waiting for is how do you actually make money with decentralized finance? There's three main ways that you can make money with DeFi. One is crypto staking, the second is lending, and the third is liquidity providing. So let's go ahead and talk about each one of these. The first thing is crypto staking. And if you're not familiar with that, it's basically when a user locks or holds their funds in a wallet to participate in maintaining the operations of a proof of stake based blockchain system. Okay, it's kind of similar to crypto mining in the sense that it helps a network achieve consensus while rewarding users who participate. So basically, you can stake your cryptocurrency. In fact, when you do that, you're helping validate transactions. At the same time, you're able to earn rewards like passive income. One of my favorite happens to be something called Anchor Protocol, which basically allows you to stake a stable coin like UST and earn up to 19.5% per year, which is crazy compared to most banks. If you have your money in a bank account, just for an example, maybe you get 0.1% per year. So the reason that I like this so much is it allows you to operate in a stable coin, which is more stable and also allows you to earn awesome interest. The next way that you can earn money in DeFi is by lending your money. So you can lend your money to other people that would like to borrow money, and in return, you're going to get paid a percentage return. Now, don't worry, you don't have to go and find the people. That's all done through these decentralized platforms where basically they handle everything. You basically go put your money in there, you agree to whatever the terms are, say it's a 7 or 14 or 28 day loan, and people are able to access that money in order to facilitate trading. And the last way that you can earn money is through something called liquidity providing. And essentially what a liquidity provider is it's somebody who funds a liquidity pool with crypto assets and earns passive income. So for example, you could liquidity provide for a pool like Ethereum USD. You'd provide $5,000 worth of Ethereum and $5,000 worth of like some sort of stable coin like we've been talking about, in this case DAI, which is a certain type of stable coin pegged 1-to-1 to the dollar. And every time a trade of ETH DAI is executed, the liquidity provider will actually get compensation for providing the liquidity. So the best way, or one of my favorite ways to do this, is actually through Pancake Swap. And you can see the different liquidity pools here. So here's Cake BNB, here's BUSD BNB, and you can see the different APRs that you could earn. So as you can see, you can earn some crazy APR, but obviously with these crazier APRs becomes a lot more risky in that sense. Also, by the way, we just got done writing this free report called 7 Passive Crypto Income Opportunities. We're explaining the 7 best crypto passive income opportunities. So if you're interested in downloading that for free, just come on over to our Instagram account at Blue Edge Crypto and message us the word passive, and we'll be happy to send that to you for free. Now, even though decentralized finance is something that is amazing and there's so much opportunity inside of it, there's also some downsides to decentralized finance. Decentralized finance is in the infancy stages, so there still is risk involved. So whenever you're involving yourself in any of these decentralized platforms, make sure that you're cautious, make sure that you do your own research, and you don't use any money that you can't afford to lose. Now, with that being said, the next thing that I wanted to show you is the 2 best crypto trading strategies. If you'd be curious to see our 2 best crypto trading strategies, I'll include a link right here to watch that. So go ahead, take a look at this. These are the 2 best crypto trading strategies for beginners that are actually proven with data. They're simple. Anybody can do it. So go ahead, take a look right now.